People really don't know what their expenses will be because they don't know how long that they're going to live.
Americans are worried they won't have enough saved for retirement now more than ever.
Retirement is going to cost, for many folks, over $1 million.
Is no sure thing in investing, but a lot of people think that annuities may come close to that.
It's going to more safe things that they know. If they know they're going to need that money to supplement their retirement, well, then you can't play that risk.
This is the Safe Money and Retirement Show with Jon Heischman Sr., founder and partner of Heischman Financial Services, serving the Columbus and surrounding areas. Jon specializes in educating pre-retirees and retirees about safe money strategies and ideas. Now, it's the Safe Money and Retirement Show. Here's Jon Heischman Sr.
Welcome to the Safe Money and Retirement Show. Good morning to all my listeners. This is Jon Heischman. I always like to hear from my listeners, whether it's to schedule a meeting or they just have questions about retirement planning. The number is 888-426-0177. Once again, 888-426-0177. And maybe there's a topic that you would like me to present. Just let me know, and I'd be happy to do a show based on your request. Part of retirement planning that needs to be addressed, if you're going to have a complete plan, is the cost of long-term care services and supports that shapes your retirement readiness. If you omit the long-term care part of your planning, it very well could distort the outcome of retirement projections. This is a topic that people, retirees, they just don't want to think about, and it might be one of the reasons that they don't plan for long-term care. I don't like to think about it. I don't think it will happen to me, and many others feel the same way. But we all have to face the facts. The population of our country, it's aging. The number of Americans age 65 and older is projected to surge from 56.1 million in 2020 to 80.8 million in 2040. As the population of older Americans grows, the demand for long-term care services and supports, a broad range of services to assist individuals who have trouble with activities of daily living, is going to certainly increase. For many retirees, long-term care services might be the most significant risk to retirement income adequacy. The recent study from Morningstar Model of U.S. Retirement Outcomes calculate the percentage of households simulated to run short of money in retirement under two scenarios. One, that includes long-term care cost and a counterfactual where long-term care costs are excluded. The results are striking. When long-term care costs are not included, 41% of households are projected to run short of money in retirement, compared with just 26% when those costs are included. It's a pretty clear picture because ignoring long-term care presents an overly hopeful view of retirement readiness, when in fact, in reality, these costs could and more than likely pose a major financial risk, one that we should not ignore. And when I say it shouldn't be ignored, I'm referring to the retiree and the advisor and retirement planners. More needs to be done to emphasize the importance of the cost involved for long-term care, especially if there is a spouse. Almost half of the baby boomers will need some form of long-term care in retirement. Now, this might seem like a high number, but these estimates are comparable to a lot of other studies. For example, a study by the Urban Institute found that 48% of adults surviving to age 65, they're going to need some form of paid long-term care. Couple that with longevity, which we're seeing today. The longer a retiree lives, the more need for long-term care is present. I think most of my listeners are aware or have heard in some form or fashion about the longevity risk, simply because of longevity. People are living longer. Incomes in retirement are adjusted or should be adjusted for longevity. Therefore, longevity creates the need for long-term care. So I'll give you some percentages of baby boomers with long-term care needs in retirement. Age 75, about 24% for males, 27% for females. As retirees age, at 85, it jumps to 40% for males and 45% for females. At 90, 46, almost 47% for males, 52% for females, and at 95, pretty much more than doubles than it did at age 75. Those numbers are 52% for males, 60% for females. Due to the fact that females live longer, based on mortality tables, females have a greater need for long-term care. So again, the longevity risk and long-term care cost risk, they're interconnected. So retirees have to consider both together rather than thinking just about the risk of outliving your money. And by the way, I have a lot of information on the effects of long-term care, the importance of long-term care, which I can have sent to you. I don't charge for this, and you're not under any obligation whatsoever. So if you're thinking you'd like some more information, the number is 888-426-0177. 888-426-0177. Now, you may be thinking, as I present the importance of long-term care to you, okay, John, I realize the importance, but there are two concerns: the cost, and what if I don't use the long-term care benefits? I've paid this exorbitant premium for 15 or 20 years, and I didn't have to use it. You know, years ago, when I first started in practice, they used to have a long-term care policy that would refund your premiums if you didn't use it, or a portion of your premiums. The longer you had it, more of a percentage was refunded back. Unfortunately, those contracts are not available today because companies were losing money, paying out more in benefits than premium payments coming in. And back then, there were a lot of companies writing long-term care. And today, there's a small group that write long-term care insurance. And again, if you've looked into the premium, you know how expensive it is. So we need to look at alternatives. Today, more people are considering the alternatives, how to preserve their assets, their retirement accounts, so they don't get wiped out by the cost of long-term care. And I'm going to discuss those options, a possible solution for your long-term care needs after the break. In the meantime, I'd like for you to think about your situation, what you have in assets for retirement, savings, all the money that you have designated for retirement over the next 20, 25 years or so, and how that would affect your retirement income if you had to dip in to those accounts to cover the cost. Many times it's unexpected. It could be from an accident, a stroke, heart problems, or a number of other things that happen, especially as we get older, and there's going to be a high cost for care. Let me give you my number one more time before the break, 888-426-0177, 888-426-0177. Stay tuned. I'm going to go over some ideas, solutions for your long-term care needs. They have worked for my clients in their retirement planning. Stay tuned. I'll be right back. Avoiding mistakes can save owners of IRAs, 401ks, and TSP plans, as well as other retirement plans, a fortune in taxes, penalties, fees, and loads. These potential mistakes are addressed in the free book entitled Top 10 IRA Mistakes. This is Jon Heischman from the Safe Money and Retirement Show, offering a complimentary copy by calling 888-426-0177. Again, that's 888-426-0177.
Welcome back to the Safe Money and Retirement Show with Jon Heischman. To contact Jon, the number to call is 1-888-426-0177. That's 1-888-426-0177. Once again, here's Jon Heischman.
Welcome back to the Safe Money and Retirement Show. I was discussing long-term care and how the cost can wreck a retirement plan if you're not prepared for the cost. And it continues to increase and will continue in the future. In the Columbus area, Central Ohio, a nursing home, depending on where you go, could range from $6,000 to $8,000 per month. Now, there are those, and I have clients that can afford to pay that because of the amount of money they have on and above their retirement income accounts. But that's a rarity. That's not your average retiree. The average retiree and the majority of retirees are the ones that need a plan, a solution to the problem. I want to talk about some ways to solve this problem that have helped my clients and have solved their long-term care problem, or at least partially solved their problem. But before I get started, I don't want to forget that I wanted to mention one of the books that I sponsor, The 10 Biggest IRA Mistakes, How to Solve Them, and also goes into detail covering taxes and retirement. So order yours along with the long-term care brochures, information that I have available for you. 888-426-0177, 888-426-0177. All right, here's some ideas that, again, have worked for my clients, and I have seen benefits paid to them for those that needed long-term care. So I know it works. It's been very helpful, and the retirement income has been able to continue for the client and or spouse. As I mentioned in the first segment, a long-term care policy is expensive. Obviously, the younger you purchase a long-term care policy, the lower the cost. But it's not unusual to see a monthly premium of $500, $600, $800 a month or more for an individual. This is an actual policy from an insurance company. If you don't use the benefit or have a claim, the premium dollars that you paid for this policy is just like your homeowners or automobile insurance premiums. If you don't have a claim, your premiums are not refunded. The policy is protecting your assets, your retirement income. Companies over the years have put together a policy that covers a couple, all in one policy. They'll give you an amount, let's say $500,000. It's available for each couple at any time, but once the policy amount, in this case of $500,000, has been used up, the contract is gone. It's terminated because there are no more benefits. I've seen the cost reduce by using this concept. It's more popular today than buying your own individual policy. How can this policy be funded? It can be built into your budget. Once a year, you can take the annual premium out of savings. Another idea, I have a lot of clients that receive required minimum distributions from their IRA accounts. They don't need these RMDs. So their annual premium for their long-term care policy comes due right after they receive their required minimum distributions. They use that to pay the premium. It can be done on an annual basis, semi-annual basis, quarterly, or monthly. Once again, that retiree has to be in a situation where they don't need their required minimum distributions. Good funding method. Or possibly a withdrawal from a non-qualified annuity that's doing well, giving an average rate of return. And in a lot of cases, I've seen where the growth is being used to pay the long-term care premium. Today, short-term care is very popular. The benefits are cut. For example, maybe there's a 2-year benefit or 3-year, and the policy premium is much lower than a long-term care policy. You still have coverage, but it's short term. The emphasis is on home health care. We would all prefer to stay at home if we had a long-term care claim. So again, the emphasis is on home care, and it's much more affordable. Medicaid can step in and cover your cost only if you've exhausted all of your assets, which I do have clients that have transferred assets into an irrevocable trust, spend down, so they can qualify for Medicaid payments to cover their long-term care cost. One problem is it has a 5-year look-back period. So if there's a claim, that irrevocable trust had to have been in force for 5 years or longer. I bring in an elder law attorney to assist with the documents and the trust. I think one of the most popular today, and many of my clients have this concept, where they will have an annuity or life insurance that has a rider attached that will pay double. For example, there's different percentages towards long-term care. Very simply, you have a tax-deferred annuity for $100,000. There could be included $200,000 worth of long-term care. The neat thing about this, there is no premium. So $100,000 is deposited into an annuity, and the annuity is issued with long-term care. So we have growth, tax deferral, and long-term care benefits if needed. And if long-term care benefits aren't needed, the assets of the annuity, principal and interest, is available, paid out to a beneficiary, or used as supplemental retirement income in the future. Life insurance works the same way. Attach a long-term care rider. You've got the growth, a tax-free death benefit in the event the long-term care benefits are not needed. Another option is a combination of the strategies I just gave you. For example, a short-term care, home health care policy, premiums paid by other assets, required minimum distribution, so it doesn't increase your out-of-pocket cost. Supplement that with a tax-deferred annuity and self-fund any shortage. What I try and do is minimize the cost. How can you get long-term care coverage at the lowest cost by using different strategies that I'm giving you, a combination of all or some? And so many retirees or pre-retirees are not aware of these different strategies and how you can take 2 or 3 and put them together in the interest of the lowest possible cost to set up a long-term care plan for you. Everyone's different. Everyone has different amounts of assets. So it has to be personalized for you in your best interest and cost. It's worked for my clients and those that will become clients of mine in the future. Hopefully, I've given you some good ideas to solve the long-term care risk. The longevity risk and long-term care risk go hand in hand, and I have to put those at the top of all the retirement risk that each retiree is going to face. We've all seen situations where a parent family member, or friend has had to suffer the cost of long-term care, and we want to prevent that. And if you haven't addressed in some form your long-term care needs, I don't think your retirement plan is complete. I'd like your feedback, your questions, or to hear about your problems with your long-term care. Has it been addressed? Chances are it hasn't. That's why I'm here, to see if the problem can be solved in some way, giving you the ideas that are available. I appreciate you taking the time this morning to listen to the Safe Money and Retirement Show. Here's my number again before I close, 888-426-0177. That number again, 888-426-0177. I'm Jon Heischman, your host. Thank you for tuning in to my show this morning. Be sure and tune in next week, where I'll bring you some more ideas that will help with your retirement planning.
The Safe Money and Retirement Show with Jon Heischman Sr. To get in touch with Jon, call 1-888-426-0177. That's 1-888-426-0177. For more information about Heischman Financial Services, visit their website, HeischmanFS.com. That's HeischmanFS.com. Join us again next time for the Safe Money and Retirement Show with Jon Heischman Sr.